Money doesn't vanish. It just silently relocates to someone more disciplined than you, and a financial crisis exposes exactly who that is. Fact 1. Rule 1. Calm is a financial weapon. In a crisis, most people behave like their bank accounts are on fire, panicking, refreshing charts, imagining worst-case scenarios, and basically performing emotional gymnastics that fix absolutely nothing. But here's the reality. The market doesn't reward panic. It rewards probability. The individuals who rise in a financial collapse aren't the smartest. They're the ones who slow down when everyone else accelerates into chaos. When things fall apart, you don't react emotionally. You zoom out, you analyze, you ask, what's the actual signal beneath all this noise? Because noise always spikes in a crisis. People talk more, news screams louder, fear multiplies, and that's precisely when opportunity hides in plain sight, disguised as disaster. Calm isn't just a personality trait, it's an algorithm. It eliminates bad decisions, protects your capital, and creates the mental bandwidth to identify the move no one else can see. Panic makes you predictable. Calm makes you dangerous, in the profitable way. The crisis doesn't decide your outcome. Your reaction does. Fact 2. Rule 2. Cash isn't cowardice, it's ammunition. Most people treat cash like it's that boring friend who never wants to go out. But in a financial crisis, cash becomes the one friend who shows up with a truck, a plan, and absolutely zero panic. Here's the uncomfortable truth. You don't keep cash because you're scared. You keep cash because everyone else is. When markets crumble, assets don't get cheaper, they get mispriced. Fear forces people to sell at discounts that would never exist in rational conditions. That's when cash becomes leverage. Not flashy, not exciting, but strategically lethal. Think of it like this. If you're fully invested when the floor collapses, your only options are panic or prayer. But if you've kept liquidity, then every plunge becomes an invitation. You're not reacting, you're selecting. You're buying the assets people regret selling 5 years later. The so-called brave ones are the ones who went all in at the top. The disciplined ones are the ones quietly collecting opportunities at the bottom. Crises punish the overextended and reward the prepared. Cash doesn't make you weak. It makes you the only person in the room with choices. Rule 3. Build systems, not emotional reactions. When the economy shakes, most people improvise like they're performing stand-up comedy for their savings account. They make decisions based on fear spikes, headlines, and whatever financial advice their panicked cousin screams in the group chat. But here's the truth the crisis always exposes. Systems beat emotions. Every single time. A system doesn't care about panic. It doesn't care about mood. It doesn't care about whether the market opens red, green, or on fire. A system is a pre-engineered protocol. If X happens, I do Y, and nothing else. The same way rockets launch by sequence, not by vibes. Without a system, you're just a biological volatility generator. With a system, you are a predictable operator in an unpredictable world. A crisis rewards the person who already knew what they'd do months ago, not the person trying to figure it out while everything collapses. Build systems, and you stop surviving crises. You start navigating them. Fact 4. Rule 4. Efficiency is your real superpower. Most people think the goal is to make more money. That's amateur hour. The real goal is to waste less of it. A crisis makes inefficiencies painfully visible. Suddenly, those tiny leaks in your financial ship don't feel tiny anymore. You start noticing subscriptions you forgot existed, stupid upgrades you justified just because, pointless conveniences disguised as necessities. Here's the mindset shift. In a crisis, every dollar you don't waste becomes a dollar that compounds, multiplies, and gives you flexibility when everyone else feels trapped. Efficiency isn't about being cheap. It's about being optimized. The world rewards people who treat money like fuel, not confetti. When you tighten your efficiency during a downturn, you come out of it with infrastructure, not excuses. You're leaner, sharper, and harder to break. And that alone puts you miles ahead of the average spender who still believes discipline is optional. Fact 5. Rule 5. Know the difference between losing money and losing nerve. A crisis forces one brutal question. Are you actually losing money or are you just losing courage? Most people can't tell. Their portfolios dip 10%, and suddenly they act like they've personally offended the economic gods. But temporary volatility is not loss. unless you crystallize it. Selling in panic is the financial equivalent of ejecting from a plane because of turbulence. You survive the drop, but you destroy the mission. Here's the principle the calm operators understand. Volatility is noise. Loss is action. One is temporary, the other is permanent. If you bought something with a thesis and the thesis hasn't changed, the price action is just weather. If the thesis has changed, then selling isn't panic, it's strategy. But most people don't evaluate theses. They evaluate feelings. In a crisis, your nerve will be tested harder than your net worth. Strength comes from clarity. Do you know why you invested in the first place? If the answer is no, the crisis isn't your problem, your ignorance is. Fact 6. Rule 6. Discipline outperforms genius. Every single time. People love the myth of the prodigy investor, the genius who sees what no one else sees. Reality check. In a crisis, genius becomes unreliable, emotional, and loud. Discipline, on the other hand, becomes a machine. While everyone else is trying to predict the bottom, disciplined operators follow their process with zero theatrics. They don't chase spikes, they don't gamble on rumors, and they definitely don't treat the market like a casino with mood lighting. Here's the truth. The world doesn't reward brilliance, it rewards consistency. The disciplined investor who keeps dollar-cost averaging through the chaos destroys the brilliant investor who makes 3 impulsive trades because CNBC told him to panic. Discipline scales, emotion collapses. The people who survive every crisis aren't the ones who shout the loudest. They're the ones who quietly refuse to deviate from their plan. That's the real advantage. Not intellect, but unwavering process. Fact 7. Rule 7. Adapt fast or become financial fossil fuel. A financial crisis is basically nature's way of asking, are you still evolving, or did you peak at tax season 3 years ago? Most people freeze when conditions change. They cling to outdated strategies like they're emotionally attached to being wrong. But the operators who thrive, they iterate, they pivot, they recalibrate without letting ego vote in the decision. Adaptation doesn't mean panic switching, it means acknowledging that new environments require new rules. Maybe your income stream needs diversifying. Maybe your investment mix needs rebalancing. Maybe your business model requires an update before reality updates it for you. The point is simple. Crises are accelerators. What would have taken 5 years to fail collapses in 5 months. Adaptation isn't optional, it's survival. And the faster you evolve, the faster everyone else looks outdated. Fact 8. Rule 8. Information asymmetry is your real edge. During a crisis, everyone consumes news, but not everyone understands it. The amateurs binge headlines, outrage, and social media meltdowns, none of which provide actual insight. The smart players search for asymmetry, data. The crowd is too emotional to interpret. They study supply chains, interest rate signals, insider buying patterns, sector rotation, psychological behavior, all the boring things that generate not adrenaline but accuracy. Information isn't power. Interpreted information is. A crisis turns the market into a giant fog machine. Most people stumble blindly, a few people bring radar. When you learn to separate noise from signal, you stop reacting to the world and start predicting it. And here's the real advantage. The crowd always moves late because they move emotionally. If you move strategically, you move first. And in finance, first is everything. Fact 9. Rule 9. Protect the downside before you dream about the upside. Most people love imagining their future riches. The upside, the gains, the fantasy graph that goes up and to the right like it's climbing a corporate ladder. But in a crisis, the upside doesn't matter. Survival does. The smartest operators don't ask, how much can I make? They ask, how little can I lose? Because when the world becomes unpredictable, the only advantage that matters is not blowing yourself up. Protecting the downside means limiting exposure, diversifying intelligently, and refusing to take risks that require perfect conditions to succeed. It means setting stop losses, increasing liquidity, trimming over-leveraged positions, and eliminating dependencies that collapse under pressure. You don't win a financial crisis by being bold. You win by being unbreakable. The upside will come later, and only to those who were still standing when everyone else folded. Structural resilience beats optimistic gambling every single time. Fact 10. Rule 10. Your network is a safety net, or a noose. Crises reveal the truth about people. Some contacts share opportunities, insights, and solutions. Others share panic, misinformation, and emotional chaos. Your environment becomes your trajectory. If your network is full of people who freeze when things get hard, congratulations, you've built a circle of anchors, not lifelines. In a crisis, you need people who think clearly, move strategically, and operate with logic, not fear. The ones who can spot openings when everyone else only sees doom. The ones who call you with solutions, not with "bro, everything is collapsing." If your network elevates your thinking, you survive. If it amplifies your fear, you drown. Upgrade your circle, and your decisions upgrade automatically. The crisis doesn't pick winners, it just highlights who built a network strong enough to withstand it. Fact 11. Rule 11. Your mindset determines your market. A crisis doesn't just attack your finances, it attacks your psychology. Most people let fear shrink their vision, their creativity, and their willingness to act. They start thinking small. How do I survive this month? Instead of, how do I rebuild stronger than before? Here's the truth the best operators understand. Mindset is not motivational fluff. It's strategy. A calm, long-term, opportunity-driven mindset keeps you scanning for openings instead of hiding from problems. It keeps you curious when others shut down. It makes you ask, what is this crisis teaching me? Instead of, why is this happening to me? You don't need blind optimism. You need constructive realism, the ability to accept the danger without surrendering the advantage. Weak mindsets collapse under pressure. Strong mindsets recalibrate. The crisis doesn't decide your outcome. It just magnifies your internal programming. Fix your mindset, and you rebuild your market. Fact 12. Rule 12. Audit your life. Like an investor, not a passenger. Most people drift through a financial crisis like they're passengers on a train that just derailed, confused, passive, hoping someone else knows what to do. But the people who come out of crises stronger treat their life like a portfolio. Every habit, every expense, every skill, every relationship gets evaluated, not emotionally, mathematically. You don't ask, do I like this? You ask, does this generate value or drain it? Because a crisis is the ultimate stress test. It exposes weak systems, outdated routines, and dependencies you didn't know you had. Auditing your life isn't glamorous, but it's transformative. You find the inefficiencies you've been ignoring, the habits that no longer serve you, the skills that are obsolete, the people who keep you stagnant, and you prune ruthlessly. The goal isn't perfection, it's optimization. In a stable economy, inefficiencies hide. In a crisis, they scream. Treat your life like an investor treats a balance sheet, and you stop being a passenger in your own story. Fact 13. Rule 13. Skill is the only inflation-proof asset. When the world shakes, people cling to cash, gold, crypto, real estate, anything solid enough to feel safe. But the only asset that never devalues is skill. Skills don't crash, don't freeze, don't get regulated, don't vanish in recessions. They scale, they adapt, they travel, and they print opportunity when everything else dries up. The crisis punishes people who depend on a single income stream or a fragile industry. But it rewards the ones who invested in themselves long before the collapse. The people who have range, the people who can pivot, the people who aren't just employable, they're unavoidable. You don't need 20 skills, you need one rare one. One skill you've sharpened so hard that the market relies on it even when it's burning. A crisis resets the game. Skills determine who gets to play. Fact 14. Rule 14. Control your inputs or your outputs will control you. In a crisis, your biggest vulnerability isn't the economy, it's your attention. Most people drown in noise. Fear-driven headlines, doom scrolling, panic posts, armchair experts predicting 9 different apocalypses per hour. Input overload destroys clarity, and clarity is the one thing you can't afford to lose when everything else is unstable. Controlling your inputs means building a mental firewall. You filter aggressively. You limit exposure to emotional contagion. You stop letting the loudest voices dictate your decisions. You choose information sources that inform, not inflame. Because here's the uncomfortable truth. In a crisis, your brain is programmable, and the world is trying to program it with fear. Control your inputs, and you control your decisions. Lose control of your inputs, and you become part of the panic-driven herd. And the herd never survives first. Fact 15. Rule 15. crisis is the great wealth transfer. Choose your side. Every financial collapse triggers the same phenomenon. Money moves. Quietly, rapidly, predictably. The majority panic sell, freeze, or retreat. A minority accumulates assets, acquires market share, buys undervalued companies, expands operations, and positions themselves for the rebound. A crisis is not the end, it's a redistribution event, a reset, a reshuffling of power. The people who survive aren't the strongest or the richest. They're the ones who stay rational when everyone else drowns in emotion. Here's the perspective shift. A crisis is not something happening to you. It's something happening around you. You decide how to participate. You can be part of the group that loses wealth through fear, or part of the group that builds generational advantage through strategy. Crisis doesn't pick winners. It just reveals who prepared to become one. Fact 16. Rule 16. Leverage works both ways. Respect it or regret it. Leverage is like fire. Controlled correctly, it cooks your food, heats your home, and powers your progress. Mismanaged, it burns everything you ever built in one afternoon. In a crisis, leverage becomes the ultimate lie detector. It exposes who understood risk and who treated debt like free money handed out by a generous universe. People love leverage when prices rise. They feel smart, invincible, destined for greatness. But when the tide pulls back, leverage stops being a multiplier and starts being a wrecking ball. That's why smart operators never take on debt they can't sustain during the worst year of their life. They don't leverage based on optimism. They leverage based on stress tests. A crisis punishes the overleveraged instantly. It rewards the disciplined slowly. Respect leverage, and it becomes a tool. Ignore it, and it becomes your executioner. Fact 17. Rule 17. Long-term vision turns chaos into strategy. Most people lose in a crisis because they can't see past the next 48 hours. Their horizon shrinks to survival mode. But the people who reshape industries? They zoom out so far the noise becomes irrelevant. They ask, where will the world be in 5 years, 10, 20? A crisis is a distortion field. It makes short-term pain look like permanent doom. But long-term thinkers see what temp panic hides. Technology's accelerating, markets resetting, consumer behavior shifting, new gaps forming. If you only look at today, you panic. If you look at the next decade, you plan. Vision isn't optimism, it's weaponized perspective. When everyone else is trying to save their month, you build your future. That's how people rise during collapses. Not through luck, but through long-range sightlines that others are too scared to consider. Fact 18. Rule 18. Reinvention is not optional. It's required. A crisis forces evolution. It strips away comfort, routine, and false stability. It asks one final question. Are you capable of becoming a new version of yourself when the old one no longer fits the world? Most people cling to outdated identities, the job title they used to have, the industry that used to thrive, the habits that used to work. But reinvention isn't betrayal. It's adaptation. The people who rise after a crisis aren't the ones who tried to glue their old life back together. They're the ones who built something new from the wreckage. They learn new skills, pivot industries, rethink priorities, and engineer themselves for the next era instead of the last one. Reinvention isn't comfortable. It's necessary. And in every crisis, the people who embrace it write the next chapter, while everyone else keeps rereading the old one. So tell me, which rule will you actually follow when the next crisis hits?